to the live. If anyone doesn't know, my name is Duke Alexander Moore. I am an advanced QuickBooks Pro advisor. I am also an enrolled agent, and I'm a small business owner. I'm an entrepreneur, just like most of you guys watching this. So, a lot of things that you have experienced or are experiencing, I have experienced in myself. So, we can get along just fine. I go live Monday through Thursday, starting at 8 p.m. Central Time. And I do this for you guys because I know sometimes you guys have questions. I may not get to it all in the comments, but I just take out this time on my day just for you guys. So, right now, I'm going to talk about like an unemployment tax strategy because, unfortunately, COVID has been havoc on us. Like, it's been crazy, it's been unfortunate, and it just kind of sucks. But I hope that out of some of you guys, maybe you may have received unemployment benefits and you might have started your business. So this is really important if, let's say, you received unemployment benefits and you didn't have taxes withheld, but you use these unemployment benefits to start your business. And so, I got in question a lot like, hey, can I use the unemployment benefits to start my business? Well, of course you can. There is no law. There's none. I Googled it, whatever you want to call it. There is no law that says you cannot use your unemployment benefits to start a business. The only thing that you should be aware of is that if you're receiving any type of income, that's self-employment income, that's DoorDash, that's OnlyFans, that's your small business, that if you're receiving that type of income, that you're going to have to report it when you claim your weekly benefit amount. That's what's important. And it could reduce your weekly benefit amount unless your state offers the C program. And I just made a video about that if you guys want to know. So pretty much what the C program allows people to do is, hey, if you're on like unemployment, you can qualify, and it depends. You really have to check with your state. I believe there's only 10 states that actually offer this, but they offer something called the Self-Employed Assistant Program, which allows you to receive quote unquote self and I'm trying to think of the word. I lost the word. It's right here. It's right here. Here it comes. They allows you to see unemployment compensation, right? It still allows you to receive unemployment compensation in the same weekly benefit dollar amount. And the benefits is that you do not have to have any work search requirements, and you can still make self-employment income without reducing that weekly benefit amount. So hi guys, I'm about to jump into it right now. So if you can hear me okay, just kind of give me a wave, give me an emoji. Let me know you're here. If you started a business, let me know what type of business you're in. Let me know where you're from. And I'm going to be jumping in right into this. So, okay. So here we go. So if most of you guys, okay, awesome. We got someone who can offer, okay, awesome. North Carolina offers C program. What's up? What's up? Oh my God. Look at everyone saying hi. You guys are so, Dallas. Okay, what's up? Crazy Jones. I'm from Dallas as well. Wow, you guys are so cool tonight. Hi everybody. Hi. Who else didn't say hi to me? I know you didn't. Everyone else has said hi. Okay, cool guys. So, who in the chat, who here, what's up Los Angeles? Who here, is anyone here on unemployment and they started their business? Anybody on unemployment and started this business? This is what this live is for you. Hi, what's up? Oh my gosh. Guys, you guys are so active tonight. This is the most active. Wow. Congrats on 1K. Okay, Lux, baby, you started your business, right? Guys, okay, cool. Guys, awesome. You're going to get so much benefit from this, guys, okay? I'm going to give you a strategy here. And I'm on unemployment, need proof that I was making money before unemployment, so I'm starting this. Okay, cool. Guys, check this out. Okay? So there was this thing when everyone was receiving unemployment, right? And they received this extra $600 benefit amount. And they didn't know, they may have not checked the box like, hey, taxes aren't withheld. So let's just look at an example real quick, okay? So let's say, and we're talking about unemployment. I'm gonna call this an unemployment tax strategy. It's called the UTS. UTS, all right? So, UTS, all right? Just start your LLC. Congrats, that's awesome. Uh-oh, guys. You guys didn't tell me to flip it. Shame on you guys. Who didn't tell me? Uh-oh, I flipped the wrong... I flipped the whole camera. I'm at the mirror. Come back over here. Now let's just mirror it. Bam! Look at that. Got a low hand. Okay. And I got a mirror on this side as well. Awesome. Cool. Back in action. Cool. Bam. Woo, congrats on starting your LLC. Okay, guys, so I'm gonna call this the unemployment tax strategy, okay? So first let's look at if you just received unemployment, right? You just received unemployment. Let's say the unemployment you received, let's see, how much was it? It was like $600 a week. That's like, damn, $600 a week? Times 4 for 6 months. Damn. Okay, so let's say, let's just say you received $20,000. Okay? So unemployment insurance, right? Your unemployment income was $20,000. Okay? $20,000. That was your unemployment insurance. That's what you received. So, yes, $600. That's just not hitting me. That's a pretty good amount of money. you out here like, damn. Like, weren't you typing in on a calculator? You're like, damn, that's $600 a week. Pretty cool, guys. If you're receiving $600 a week and you do not use that money to start your business, oh my gosh, cool. It's gonna be so rare to come across this opportunity again. And why not? You know how many people like they beg like, oh my gosh, can someone give me money to start a business? Gosh, this is I know you guys had other obligations, but even a little $10, But let's get to it. So let's say your unemployment compensation was $20,000. So let's say that tax rate, right? So let's say tax, I'm gonna put this right here, 10%. 10% tax bracket, right? So your taxes owed, right, is gonna be $2,000. $2,000. So when you file your tax return, and you had, if you filed your tax return, and you had no taxes withheld, you didn't have a standard deduction, this is like thinking like, hey, we don't have no credits, we don't have no deductions, we ain't got none of that, right? If you have unemployment insurance for $20,000, you're in a 10% tax bracket, you're gonna pay $2,000 in taxes, okay? So be prepared to have $2,000 up. Now, what if you actually start a business? Haven't you heard that, hey, businesses get all these nice little deductions, they can save on taxes? Well, it's true. It's true, right? And the neat thing about business, like especially if you've started a business this is your first year starting a business, well, guess what? Most businesses operate at a loss in their first year of business. So it's no surprise to the IRS, it's no surprise to anybody that when you're filing your tax return, and this is your first year in business, and it's gonna ask you, on your Schedule C, there's gonna be a box, and it says, first Schedule C for this business. Hi, it's gonna say first Schedule C for this business, and you check that box, right? So on your tax return, they're gonna know it's your first business, and it's no surprise to the IRS or anybody reviewing your tax return that you operate at a loss your first year. Now, I'm not encouraging you guys to go out there and start a business, just operate at a loss. In fact, if that's your primary reason for doing this, then I advise you to just give this video a thumbs down and leave. Because I'm only talking to people who are serious. I'm only talking to people who really want to take their business, really want to take their hobby and make it to a business, or they seriously started a business. I'm talking about the real people in here, right? Because we all real. That's what I'm talking about, right? So let's say your business, right? So let's say your business You spent a lot of money on your business. Let's say you spent a lot of money. Let's say you lost $20,000 in your business, right? You lost $20,000. So you had a negative $20,000 in your business, right? You had a negative $20,000 in your business. So the neat thing about a business loss is you can use it to offset other income, right? So what does that mean? So we have $20,000 in unemployment income, right? We have negative $20,000 in business income. Well, if you take 20 minus 20, you get, hold on, let me just do it like this. There's taxable income. 10%. Right? So if you take 20 minus 20, your taxable income is now $0. Right? And we take 10% of $0, that's $0 in taxes. So you see how this loss could offset our unemployment income, and we went from paying $2,000 in taxes to literally zero just by claiming our loss. Now, there's a way to do this, which, guys, this is really important. So pay attention if this is you. There's a way to do this. Now, more than likely, does give me an emoji if this makes sense so far. If this makes sense for, just give me some type of emoji like, okay, I understand that I can use my business loss to offset other income. If this makes sense, just kind of give me an emoji. Or if you have any questions on it, just ask it down. Okay, we got an emoji. Awesome. So it makes sense. Awesome. I you know what's really funny? I love like the random non-profit consultant. Oh, please send me a message because I have a lot of people who need nonprofit help, and I don't specialize in nonprofits. The random emojis I get, that is so cool. All right, cool, makes sense. Now, next thing we're gonna talk about. If that makes sense. Now let's talk about the actual deduction. Let's talk about the actual deduction. Yeah, nonprofit, send me a message, please. Let's talk about the actual strategy. So, more than likely, when you start your business, you're in what's called, I'm gonna put it on the board too. Startup mode. Okay? And some of you guys still might be in this mode. Now, this part is really important. You're in startup mode, okay? This is really important. If you are in startup mode, you cannot take any business deductions. Thanks for sharing the live, Brenda. If you're in startup mode, you cannot take any business deductions. You need to be engaged in your business. So you need to take your business from start, and I'm going to teach you how you can take your business from startup mode. I'm going to teach you how. But you have to take your business from startup mode to business mode, right? Actually open your business before December 31st of this year. If you do not take your business from startup mode to actual business before December 31st of this year, it's not going to happen, right? You're going to have to carry that over. Okay, so this is pretty much how it works. Any expense that you incur in the course of opening your business is what you call a startup expense. Okay? Once you are officially in business, right? You are officially in business once you make your first sale. So the easiest way to get from startup mode, and you have to be engaged in your business, right? It's not just a hobby, right? You have to be engaged in the business. And you have to be in the business to make a profit. Now, how you get from startup mode to opening for business is you make a sale. Okay? So all the expenses you incur before that, you can't deduct it unless you make a sale. So does that make sense? Startup mode, right? Because think about it, guys. we can just go spend all this money and not even have a business. You have to go from starter mode to business. So I'll give you an example, right? So let's say, and anyone who watches this live, you know, if this is your first time here, you know I like to use the chicken sandwich business, right? So let's say we have a chicken sandwich business, okay? So let's say we want to start a chicken sandwich business. So we go out there and buy chickens, right? We buy chickens. We train workers, and we market, right? Chicken, let's say a chicken fryer. Chicken fryer, right? All right, let's say a chicken fryer cost us $5,000. Training the workers costs us another $5,000. And marketing costs us another $5,000. Right? We incurred all these expenses just to start a business. So our startup expenses is $15,000. Right? Our startup expenses are $15,000. And we cannot start to, sorry, this light. We cannot start to deduct those expenses until we open up our business, until we're in business. And the easiest way to tell you're in business is, hey, go out there and make a sale. Okay? So let's say we have this chicken sandwich business. Now we have $15,000 that we can deduct. All we have to do is make a sale. Okay? Does that make sense? Okay? Got it. Okay, hi. Hi. Okay. So, and guys, it's really important that you're tracking these expenses, especially these startup expenses. Okay? Yeah, that makes sense? Awesome. It's very important that you're tracking these expenses. If you're on this live, I always recommend that you use QuickBooks. Think about all these companies who have very good bookkeeping. Walmart, without bookkeeping, you wouldn't be able to get your products. So if you ever want, you're my best friend. Thank you so much. If you want to be very successful in your business, you gotta already operate like you are in a big business, right? I strongly recommend that you guys get started with QuickBooks. It does so much. I'm here to help you on the way. I'm gonna try to make more YouTube videos for you guys so you can QuickBooks a little bit more easier. But please, what's up, Kelsey? Please get started with bookkeeping. That is really, really important, okay? So once we have our startup expenses, right, which is $15,000, right? So if you don't have that long-time hobbyist, so you can turn your hobby into a business, right? Especially if you receive unemployment and you didn't check the little box, of course you can, right? So let's say we have these startup expenses. And then now we make a sale, all right? So we make a sale. So we sold a chicken sandwich. We sold a chicken sandwich to our mama, right? Go sell something to your parents. Go sell something to your cousin. Just go out there and make $1 before December 31st, 2020. I'm trying to save you guys on taxes. Go out there and make a sale. Now you can deduct these expenses. Now, startup expenses are a little bit tricky to deduct. Okay, I'm gonna show you something. Startup expenses are a little bit tricky to deduct because they're not actual like business expenses because you're not in business, right? So startup expenses, I'm gonna say it again, is not business expenses because you're not in business. But you can still deduct these startup expenses in a tricky way. So I'll go over it. So we got the startup expenses part, right? All right, cool. I didn't erase my strategy. I didn't erase the strategy, oh no. All right, got it. So we got the startup expenses. Okay, ready? So you can deduct 5. Okay. Startup. Okay. So the IRS is nice enough to allow you to deduct the first $5,000 of your startup expenses in the year that it occurred. The rest of it has to be spread out over 15 years. This is called amortization. All right, so I'm gonna say that again. Your startup expenses, and most of you guys probably won't exceed $5,000 in startup expenses, but some of you guys will. Okay, the first $5,000 you can deduct immediately on your tax return, even though it's not a business expense. The IRS is allowing you to deduct those first $5,000. So, like we said, when we started our chicken sandwich business, we had 15K. Right? Remember, we had 15K in startup expenses. So, the first 5K we can deduct this year. Thank you. What's up? Happy birthday, y'all. It's Beard's birthday. The gluten-free, it's their birthday. So just tell them happy birthday. It's their birthday today. Tell them happy birthday. So the first 5,000 we can deduct in this year. Right? The first five, okay. But this is have to be this year. The first 5,000 can be deducted in this year. The rest of the 10,000, 15 years. 15 years. So the rest of the 10,000, 15 years, okay? That's how startup expenses work. That's how startup expenses work. So the first 5,000 you can deduct in a year. The rest, has to be over 10 years. So now that we understand that, hey, once you make your first dollar, thank you guys so much for telling them happy birthday. Once you make your first dollar, you are in business, okay? So it's about to make sense right now. Okay? Once you start your business, then we got unlimited deductions, okay? So let's say this is our timeline, right? This is December 31st. This is I've never really wrote January 1st. Okay, right. Let me make sure y'all see this. Right here I wrote December 31st. This is January. All right. So let's say right here. Okay. Right here. No, right here. We started, right? Started planning, I'm gonna say started planning business. All right, so let's say right here we started planning our business. Right? We started planning our business. Okay? And then right here we made our first sale. So this gap right here, between this gap, startup. Startup mode. Okay, so let's say we started planning our business right here. And then, let me make this a little bit bigger. Okay, we made our first sale. Okay, so we started planning our business right here. All these expenses, well, most of these expenses, you're gonna have to really look them up. Most of these expenses right here, it's gonna be in our startup mode, right? It's on startup mode. Then once we make this sale, we're in business. So after that, guess what? We get business deductions. So the expenses we incur in business deductions, we can just write those off. And just write them off, put them on tax return, write them off. Let's pay less taxes. But while we're in startup mode, we're only limited to deduct that first $5,000. This is why it's really important that you start your business as soon as possible. Because especially if your unemployment's really high and you have really high expenses, well, let's make those startup expenses into business deductions as soon as possible. And this is really important if you're, operating at a loss. So yeah, great information. I didn't know that. Yeah, so in startup mode, just wait exactly. Because in startup mode, really, okay, here's a strategy. Try to limit your startup expenses to $5,000. Okay, because we can only deduct the first $5,000 when in startup mode. The rest of it we can only deduct over 15 years. This is very similar to depreciation. Depreciation, we can only deduct over a certain amount of years. But when we're talking about startup costs, we don't call it depreciation, we call it amortization. Amortization and depreciation are the same exact thing. The only difference is depreciation is something like I can touch. Depreciation is like for tangible objects, right? Amortization is like I can't really touch it, right? So something like a patent you would amortize. Something like your startup costs, there's so many, you would amortize. So that's what we have to do with our startup costs. So that's why it's really important. Let's make your sale. So guys, tomorrow is December 1st. If you can make a sale, go sell something. Go put it on your profit and loss. Go put it in your QuickBooks so you can be in business, so you can start taking business deductions. So if you can use that to offset your unemployment income. Yeah. My hourly rate is really starts around $250 an hour. Yeah. But that's why I'm here. I'm also here. So yeah, if you want to reach out to me, send me a message and we can definitely talk. With QuickBooks, something online or not sure. I recommend QuickBooks. And I'm an affiliate with QuickBooks, so if you go to the link in my bio, you can get 40% off for 6 months. Most of you guys are just going to use Simple Start. Now, when you're choosing QuickBooks, there's two versions of QuickBooks. There's QuickBooks Online and there's QuickBooks Self-Employed. I don't recommend the desktop. There's QuickBooks Online and there's QuickBooks Self-Employed. QuickBooks Self-Employed are going to be for people who do like DoorDash, or they do Instacart. They probably don't have a separate business bank account. QuickBooks Online is going to be for that small business owner. So that online business owner, someone looking to make their business into an LLC, an S Corp, and just expand it. And so that's what QuickBooks Online is for. And typically, I would recommend the Simple Start. Most of you guys can just get away with using the Simple Start unless you have like multiple users or you need something like that. But yeah, definitely save some money. Use the link in my bio. Plus, QuickBooks kind of hooks me up with more people that go to my link. So use the link in my bio. It's a win-win. 40% off for 6 months. Can't beat that. You can't beat that. Unless they're still having their Black Friday deal, which I believe they're doing like 70% off for 3 months. If they're still doing that, you guys should take that. Yeah, I still recommend QuickBooks for DoorDashers. So for DoorDashers, QuickBooks Self-Employed. Yeah, QuickBooks Self-Employed. Yeah, so if you do something, so if you receive, okay, before I erase this, does anyone have any questions on it? And if it made sense, just give me some type of emoji. Yeah, it made sense, or just let me know. Yeah. Just kind of let me know. And we'll go from there. Oh no, I lost connection. Okay. Does it make sense? Hold on. What were we just talking about? Okay. QuickBooks. So, there's two versions of QuickBooks. Right? For answering this question, there's two versions of QuickBooks. Alright? So, QuickBooks, you have QuickBooks Self-Employed. Okay, there's QuickBooks Self-Employed. You have QuickBooks Online. And it's really important for you guys to understand these are two completely separate versions of QuickBooks. Hi, hi Brianna. These are two completely different versions of QuickBooks. With QuickBooks Self-Employed, Okay? These are typically for people who receive 1099s. Typically. Alright? How do you know if you received a 1099? When you started the job, they had you fill out a W-9. Alright? They had you fill out a W-9. That's how you know you receive a 1099. So, this is like DoorDash, just like Instacart, OnlyFans, unless we have a strategy. And mostly if a client's watching this, sometimes I will recommend you do QuickBooks Online instead, just because your income is so high. If your income is really high, let's say we're doing like $100,000 a year, I'm not going to have you on QuickBooks Self-Employed. I'm going to put you on QuickBooks Online because we're going to put you into an S Corp. But yeah, besides that point, QuickBooks Self-Employed, 1099s, okay? So QuickBooks Self-Employed is designed for the independent contractor, okay? Now for QuickBooks Online, this is for the small business owner. Small biz owner. It's for a small business owner, okay? And you're typically want to go and get started with the Simple Start. Most of you guys will be okay with using the Simple Start. So this is really if you're sending invoices, you have contractors, you need a profit and loss statement, you need a balance sheet. That's the importance of that. So yeah, that was a great question. Yeah. So now I'm gonna jump into you guys' questions. I hope all that made sense, guys. If you have any questions or you're just joining, I've covered the unemployment tax strategy. And if you missed any of this video, what I'm gonna do is I'm screen recording this right now. Hopefully it's still screen recording, and I'm gonna upload it on YouTube. So you guys make sure you can check it out there. But yeah, so just talk about QuickBooks and QuickBooks Online. It's good to learn this now before ADD runs out. Yeah. Any questions about QuickBooks, about taxes? Who in here has started their business this year? By the way, congratulations. That's amazing. Cool. Awesome. Where does one learn this much about taxes? I've learned personally from experience. I own a tax firm. So I help my clients with this 24/7. The video keeps freezing. Oh, I'm sorry. Is the video freezing for anybody else? Thank you, I watched. Yeah, I'm gonna upload it on YouTube for sure. We talked about the unemployment tax strategy, and I think it's really important that if you started a business and you're receiving unemployment, this will help for you. Thank you very for me. Welcome. Are there any ways to avoid paying No, not in California. That's why it's really tricky to set up an LLC in California. Bye, have a nice night. See you later. What happened to your hand? I got a scar. I got an infection. When I was younger, I hit a table. I was mad. I was upset when I was younger, and I punched the table. And when I punched the table, I got a little cut right there. And that cut got infected, and they ended up cutting me up. I can show you pictures, but it's really gross. Really, really gross. Yeah. Awesome. Hi, Alicia. We covered everything. So, guys, if you're just joining, I was covering the unemployment tax strategy. So, I'm gonna upload it on YouTube. So, if you missed it, if you're just joining, you'll be able to catch that on the replay. So, absolutely. Congrats on your firm. Thank you so much. Haha, make me happy. Hi, what's up, Hannah Duck? What up, user? Yeah, guys. If there's no more questions. If there's no more questions, I'm just going to hop off on here. And I appreciate you. I appreciate everyone who follows me. I appreciate everyone in this live. You guys make me extremely happy. And so I do this for you guys. I take this 30 minutes, an hour of my day, Monday through Thursday, just to help you guys out, answer your questions. So I'll be back tomorrow, same time, 8 p.m. Central Time. So write down your questions, and we'll be back here tomorrow. You guys are so welcome. I'll see you guys tomorrow. Thank you so, so much, guys. Thank you so much. Make sure you guys can see that. Hi. Welcome to the live.